Hey everyone, and welcome to Monthly Market Report. It's Coram here, along with our monthly guest, as always, on this show. We've got Roppel Report founder and hedge fund manager Jim Roppel. Jim, great to see you as always.
Great to be here, as always.
All right, and it's going to be a fun episode because it's a big week. Probably the potentially most pivotal week of the year for the stock market, at least the most highly anticipated week, that's for sure, with the presidential election day happening tomorrow. So we'll have to see how this week plays out. So we'll get into all of that, your thoughts on positioning ahead of the election, but we also want to talk about our October highlights and what went down in the month of October and what that means for this bull market that we've been talking about. When you take that step back, it's been a great year, Jim. So October, what are your thoughts on the action?
I just cannot believe that I end up on this show like the day the market gets killed, or, like we're not going to talk about the coming month because it would be the election, the Fed, and tons of interest rates earnings reports all at once. You
Yeah.
couldn't have been more right. Like this is the Super Bowl three-way, cubed. But the month of, even September and October,
Mhm.
massive curve buster, expectation breakers, up 5 of 6 or 6 of 7 weeks in a row
Right.
into a seasonally really bad period, just kind of caps off this crazy bull run we've had this year. We're up 20% ish. It was make money time,
Mhm.
max long until last week. And then last week, it became very difficult to make money. We had a couple bad breakdowns in now, I shouldn't really say that. There weren't bad breakdowns. The Mag 7 still looks pretty good, but there was some pullback on earnings. And the earnings season has been a minefield. I
Mhm.
really feel that you almost have to be. It's very difficult for me to go into earnings without a hedge on because
Mhm.
there's been as many great ups as there have been big misses or
Right.
disappointments. So it's not like an earnings season of prior bull markets when you can really just go on hedge and expect, 8, 9, 14 to 15 names to gap up or hold their ground. We have not seen that, but we've had a lot of saviors in there because when ASML missed, the next day TSM came in and saved the day. So it's been super mixed on earnings.
It really has. So, on balance, I mean, I guess it makes it really tricky for investors because some stocks that were leaders heading into their report now have really damaged charts. So, I guess it just sort of shows which stocks are going to continue to be leaders and which ones, hey, they're going to need time to repair their charts, and we have to focus elsewhere.
I completely agree, but a lot like again, if a stock comes down, say 20%, as long as it's just a little bit below the 50, I'm not going to flip out. I mean, I'm trying to sit with these
Mm.
for 8, 4 to 6 beat and raise quarters. You're going to have probably at least one miss over that 4 to 6 quarter period. As long as they don't get too damaged below the 50
Mm.
day, more than 23% for me is kind of a big problem. But I really just try to sit with these things. And the Mag 7 has been really resilient. And actually, a couple of them look absolutely spectacular.
Mhm. So Tesla, I'm only pulling this one up because it had a great reaction to earnings. It's still holding around that gap up day low. But if I could read your mind, Jim, I would probably guess that you still think Nvidia is the best looking Magnificent Seven stock out there. Full disclosure, I do own it. But Meta also, I would say, is, it's holding up. It's above that guardrail that you always like looking at, the 50-day.
So let's take them one at a time.
Yeah, let's do it.
Tesla came ripping out and it almost ellipsed that pivot. I think you had an early pivot opportunity to try to get a position.
Mhm.
Um, And also, there was a lot. Look, Tesla at this minute is almost a Elon Musk Trump meme stock. And as right at that time, Trump was kind of maxing out in the spread over Harris. And then as that faded, the stock came in. So I'm not sure how much of this is about Tesla's
Tesla
future earnings and,
or
you know,
Elon.
or Elon being the de facto vice president. I don't know, but it did fade and it never really fully definitively virally cleared 274-ish. Okay? So if you look on the weekly,
Right.
you have multiple pivots here. And I've been a big bear on this stock for a very long time, but I have to say the RS is now up to 85 from like 23. And if it comes out of there, this is going to be the second most liquid dollar volume stock in the world next to Nvidia. Now, you said the next one, did you talk about Meta or Nvidia?
Nvidia was next. So great segue. So we'll go there.
Okay, so this is diverging from the SMH. And I think it is because it is so overwhelmingly dominant. It's darn near a winner take all. It's winner take most at the least. And all these analysts are going, oh, AMD can down the road sometime can dethrone or at least be a real challenge. And I'm like, well, living below the 50, 221 day with a 45 RS, that is not happening.
Right.
Not even, it's just not in the cards here. But Nvidia is, look, earnings season has proved one thing to me. All roads cap XYs lead to Nvidia. If you're a major budget company globally, you are spending money at Nvidia. They are the arms dealer in this existential race to dominate AI. It's the Cisco. Cisco did not care if your online shop did great or didn't do great. They just wanted you to buy their routers and their connection devices. NVIDIA is like, whether you get the first large language model that has the greatest, whatever they monetize it or not, just buy our GPUs. And that's why the SMH is diverging down. I would really prefer that, much prefer that to get in gear. So anyway, the last one, what you said was Meta.
Was Meta.
And it looks very good. I mean, if you can't sit with a stock down 4 or 5% off the highs, you probably shouldn't get in the stock market. It looks fine.
Yeah.
It looks really good.
Right. Well, I guess while we're here, I feel like Google Alphabet is a different picture. We had that initial enthusiasm that faded. Now it filled the gap. It still is above its longer term moving averages, but I mean, if you chase it at 180, it's I feel like you can sort of see the ones that are a bit more quality in the Mag 7 versus ones that just need more time. And I feel like this is in that camp.
You're 100% correct. And we also have I've not been able to make money in the last 5, 6, 7 days. So the whole market's cooled with the uncertainty, but we absolutely must look at Amazon monthly. This is, I know I always talk about NVIDIA being the kingpin Mac daddy, but maybe even a weekly.
Okay. You got it. And then I will zoom out a little bit because I zoom in for all of our IBD Live people. They like the zoom in. Is that good for you, Jim?
This is perf. You are the master driver of Market Smith.
Market surge,
Whatever. Dude, I'm a dinosaur, okay?
We'll excuse it.
So what does it say about the consumer and AI when Amazon is, 2% off the all-time high? If this thing comes out of here, it is going to be green light central, and then if you could somehow get NVIDIA to join the party, this is really probably, I think, maybe the best barometer for the economy and AI. It's really the double whammy. And they both look very, very, very good. Fear is off the rails. And these two stocks are positioned, the two most important stocks in the whole market are looking like very healthy at the least.
Yeah. Yeah. They look totally fine there. And then Apple, but it seems like this has been, I would say, a mediocre mega cap tech. It's not as strong as NVIDIA. It's not as weak as Microsoft. So kind of in the middle of the pack, but recent damage after the earnings report in particular.
When you would hear that Warren Buffett lopped off half his position, you think people would have run for the hills. And there's been a little damage in here. What percent off the high is it?
Let's take a look. Off of the 52-week high, 6.5%, which is the all-time high.
I don't fret
Yeah.
unless a stock starts living below the 50 meaningfully or the MA start turning down. It's just a dormancy period. The biggest weekly volume bar is on the upside. And
Mhm.
we are likely, very, very, very likely to see 250 million iPhones refresh in the next
Right.
3 years. And analysts are crazy bearish. I'm reading all this, bear report, and the stock's hanging in there. So again, I'm just not going to get too bearish on this.
Yeah. Okay. Well, I guess since we've been talking about earnings season, we've got to talk about Eli Lilly because that definitely sold off on earnings. But I think if you do that step back look, Jim, we've got the 200-day or the 40-week and 800 feels pretty significant here, I think, for the bulls to want to hold above. But what's your assessment now of this recent damage? You talk about volume. I mean, earnings week, heaviest volume in a very, very long time, if ever, for this stock last week. It's not looking as good as it was, but where does this stand in terms of how worried you are, or is this one still hanging in there from a long-term perspective?
Long term, it's about 20% off the high ish. It's holding the 200-day. There's something wrong. And Novo Nordisk is something's a
Yeah.
lot more wrong, but I don't know what's going on. I have to say, I have gone to a fully hedged position, and on that bad break,
Mhm.
I've vomited up 30% of my whole position that I've been holding for a very long time.
Mm.
I regret that. I wish I would have hedged it because we're so darn close to the new year, and I'm so darn close to a long-term capital gain. I mean, I dealt with this thing in the first pullback. We're really just touching those lows again.
Right.
I went through that one hedged, and it resolved itself to the upside. So the fundamental metrics are the total addressable market might be the biggest there is I can see, and it's weight loss drugs accounted for 9 billion, 10 billion in sales this year. It's expected to be, by everybody's guess, 100 billion in 6 years.
Mhm.
I would suggest they're going to get a significant part of that unless it starts living below the 200-day. And I'll remain hedged until it rights itself or it doesn't. Expectation breaker to the downside, demanded action, and it
Mhm.
forced me to trim a touch and hedge, and I'll remain there. Now, again, it's not going to be buyable until it gets above that 9. Right up, you were the best. That's exactly it. You must hang out with stock traders.
I am a stock trader too. It's
So right
yeah,
there, if it were
takes
to
so
come
to
back,
know it.
if it were to come back over there, I would
Mhm.
add those shares back in 3 seconds.
Right. Yeah, and I think the low from a couple of days ago now important. I think even this one too, if you draw it back, there was all that congestion from the spring. That's where we tested in late July, early August. So I think that's another level to keep an eye on to the downside. But yeah, hopefully it can sort of hang around current levels. I think with everything, Jim, a lot could depend on this week, right? So, uh, pivoting to that, I know I'm jumping around here, but I think that the audience is on the edge of their seat right now, wondering what to do, how to handle their portfolio heading into this risk event. Just like how we talk about, the Fed cutting rates or, an earnings report for an individual stock. You talked about being hedged. So when you take that step back and you look at where we're at in the market trend, looking at how this earnings season has unfolded. We also haven't even talked about rates yet. Speaking of the Fed cutting rates and the 10-year immediately rising ever since then. But you have this presidential election that is uh, creating a lot of uncertainty right now for investors, and they want to know, Jim, what they should be doing with their portfolios. So, how are you handling your portfolio at this time with this risk event right around the corner?
So, shocker of all shockers, the market threw us a giant curveball. 2 weeks ago, it was pretty decisive. The market had priced in a Trump victory, and then curveball central. The futures market caves into a spread of like 5 or 6 points. So when the market knew, or the market felt it had some degree of certainty, the
Mm,
market traded in the direction of each candidate for like Chinese stocks went down because Trump was doing well, and crypto was rocking. Now all the market doesn't know, so crypto's come in, China's come in, uh, the market's adjusted to no opinion. So
mm,
before, I would have said, when it was largely expected Trump to win, we would have nothing post election. Now, I think those stocks are going to have to adjust to whoever does win. So I do
mm,
expect a significant move post. I am very hedged, heavily hedged in index futures right now against all my long stock. Um,
mm.
but I think we are approaching a period of max fear. The VIX is really up at 22 ish, right at the highs for the. Okay, so look at that. It's elevated significantly. I think post election we're going to rip because the market doesn't know. It's going to relief valve, and there's cash jamming in the money markets. People have done nothing for now 5 to 10 days. They're going to
Mm,
have relief. Now again, I believe, and again, this is an opinion,
mm.
this is not the election outcome will not be known maybe till Friday. It's so close. I don't know. And then there could be a contested election based on the Cheney Bush uh, Gore
Right.
election. That didn't get resolved
1,000.
until December 12th. That's not going to be, if that remains, I will remain hedged. But the second we
Mm,
know, I think it is very likely to be a fear relief valve move higher into the end of the year. And I want to say this, I don't think it's the election. It's about the Fed. The election is going to be forgotten 4 days post known winner. And that's going to be relegated to the dusty shelves of history. And
mm,
then it's going to be through the windshield I drive my car to AI and a dovish Fed.
mm.
That
I was just going to jump in, Jim, and please just jump back in. I didn't mean to cut you off there, but I was just going to say, in terms of you thinking that the election just being a very short-term market reaction, and it's these other factors that are going to have more weight into year end, is that just because you've been through so many market cycles, and so you've seen election reactions before? Because there are some out there who are saying, because you talked about crypto, and some of these other bets that are being made on an industry group level, on a sector level, that there's speculation that we could see some movement. But what are your thoughts on that?
one of the most beautiful charts I've ever seen in my life is Bitcoin right now. If you look at a long-term chart, it is spectacular. And if you look at a chart of Bitcoin that won't be on your charts, but since inception, every time you have a 1, 2, 3 year base and it makes a new high, it goes to Mars. And we are sitting, this is not illustrative of it. But
Yeah, it's a rough proxy.
it is. When you look long term and you see what happens after Bitcoin makes a multi-year high, which it's sitting at this massive base. And if look, it doesn't matter who wins. The genie's out of the bottle. Crypto is decentralized. I've made killings under Republicans and Democrats. This is a moment, and it's so hyped up, and the fear's so high. It makes me want to think that we're going to have a big relief rally.
Hmm. So there's
Um,
just going to be this sigh of relief no matter what, because it's now a known versus an unknown.
you got it. It's like let the emotional people. One side's going to cry, one side's going to cheer, but the market's going to move forward. I mean,
Mm,
we've had yes, the election is a sideshow. And it's like the Super Bowl. I mean, everybody wants to know, It's like, who
Mhm.
shot JR? We'll have to watch that final episode. But it's almost like a fun thing for me because I am 100% confident we are going to make a killing in the next 4, 5, 10, 15 years off of this AI revolution. We're going to have multiple elections before AI is fully monetized. It took 30 years to monetize and find the bulk of the use cases for the internet. Think about all the elections we had in there.
Right.
Election, shmelection,
There you
history.
go. There you go. I like that. I like that frame of mind, Jim. Okay, so what else do we need to know about October? You mentioned the oil market. Should we chat? Should we chat about that? Or you mentioned it to me
Yeah.
before the show, at least.
Well, trust the market. Everybody is, again, fear, fear, fear. Israel is going to attack Iran. And the oil market, a really credible man says, like, oh, yeah, $300 oil is totally in place. If Iran loses their oil facilities and they go offline, oil's going to 300. And this is not just some crazy dude. And I'm like, yeah, but that's one man's opinion. And oil is at the bottom of its range.
Right.
Now, who are you going to believe? And the oil market had it right. And now again, there's now news that Iran is going to retaliate against Israel. So I'm looking at the oil market. Oil market doesn't think there's going to be any damage. And, again, now I'll put my opinion in there. I don't think that the government currently is going to let any side do something major before a major US election. And I think the second the current president, depending on who it is elected, they're going to pick up the phone and call him and say, gentlemen, chill. I just don't think, again, the Middle East is not a big factor in oil, and that's the oil market saying. It's not Jim Roppel's opinion. So when you have big concern or big fear, just look at the charts. If oil was going up $4 or $5 a barrel every single day, I'd be like, ooh, there's a real problem brewing. But until the debt of the country is so enormous where the dollar's going to implode and the bond market's going to implode. Well, until they start rolling over, the trend isn't even remotely close to showing that.
Right. So I just pulled up UUP, which is an ETF that tracks the dollar. And so we're still seeing a strong uptrend there, Jim.
Yep. And so rates have backed up a little bit. I do feel there's a very high probability that the Fed might overcook this. The market is incredibly strong. American Express is strong. Walmart is strong. Costco is strong. Uh, international paper. International paper is such a good measure, IP, right?
Yes.
Because if it's going to ship and it's a material product, not digital, it's going to have to be put in a box. All right.
Mhm.
Now, the Fed is continuing to cut rates, short end, and the intermediate and long end's backing up.
Mhm.
And everyone's flipping out about this. And I'm like, well, wait a minute here. What if we just go back to a normal yield curve where short rates are below long rates and it's like really healthy?
Mhm.
So we're in a flux period. People would not expect intermediate and long rates to back up when the Fed's, but my greatest fear is the Fed's going to overcook it. They could pause here and just see what the market does. When they're focused on the jobs numbers, which was super weak on Friday, but there was, the hurricane and whatever
Mhm.
outside Boeing.
Yeah.
Let's just let it see what it does. We have the Fed put here. The Fed has bullets. I don't want them to overcook it. And I'm worried if American Express keeps rolling up like that, the economy it's not hot, but I think the Fed is over focused on jobs. And if they keep looking at that, just because people don't go to work or get unemployed doesn't mean they're not signaling they're stopping spending. And that's the issue.
Hmm.
All right. I rest.
No. So basically, what you're saying is the Fed should take things slow.
Absolutely.
Is that what you're arguing?
The worst thing they can do is reignite inflation. And I think we're getting there. Look, gold will not back off.
Yeah.
It's extended and it will not break. There's a reason. Now, again, if you look at the Mona Lisa, hit the monthly,
Mhm.
this looks like Bitcoin. Okay. You come out of a 20-year base. Look, new highs after monster long bases are just go long signal. And I'm
Credit to you, Jim. You were all over this.
well, I had to wait 2 or 3 years. I was wrong for 2 years.
Yeah, tried a couple, but no, you were all over it when it broke out.
Well, look at XBI. XBI has a bottoming base that looks beautiful. Over those highs and the innovation, the budget for biotech R&D per year, I think it might be $250 million or billion. I don't know what it is. It's some gigantic number. And then IGV has come
Mhm.
out of a beautiful base.
Yeah.
You know, look, the election, schmelection, look at these bases I'm showing you. The Nasdaq's 3% off the all-time high. The S&P's 3% off the high.
Yeah.
Look at IBKR. This is this thing is straight up. The only problem you have with it is it's extended. And look, they missed the market had a negative reaction. It righted itself almost immediately.
Mhm.
And this isn't isolated. Look at IAI.
IAI. There we go. Mhm.
I mean, it's pulled back down. This is the broker dealer index, man. These guys are processing all the trades. The market knows.
Well, that is definitely comforting. So, Jim, if you are of the mindset that we could see a sigh of relief after the election, then what's on your shopping list? What's on your buy list? Obviously, you are holding a lot of the leaders, but what about setups that you're keeping a close eye on that you're wanting to try to put on for size if we do see a positive reaction over the coming days or weeks? Or is it more about adding to your established big winners?
Both. Okay, so I'm a raging bull on A Lab, and I think it's up like 13 or 15% in after hours. You know, I put it in the report. I talked all about it, and it has two sets of 2 weeks tight here. It's now exploded up. It reminds me of Reddit.
Mm-hmm.
You know, Reddit. I read a research report on Reddit a year or two ago, right after it came public, and the analyst said it's an amazing business, but they have to figure out how to monetize it. Well, guess
Mm-hmm.
what? It looks like they did because they were expecting a loss and they earned 13 cents, I think, or something like 16 cents.
Mm-hmm.
This is the Facebook moment. Facebook goes public, everyone realizes we're going to mobile, and they didn't have it figured out. Well,
Mm-hmm.
Reddit comes public, they didn't have monetization figured out. Well, like they did. And now A Lab is really integral to stopping the bottleneck of data in GPU clusters for AI. This thing is held, I think, 25% by insiders, triple digit sales, triple digit earnings, skyscrapers of blue volumes. It's profitable. It totally fits the look at those skyscrapers of blue volume. It's
Mm-hmm.
there is bigger than the week it came public. Institutions, it's very rare to have a lot of institutions in an IPO this early. There's three Fidelity funds and one other key fund is in there.
Lord Albert, Alger, Invesco Discovery, Contrafund,
Yeah,
to name a
so
few.
like as it was coming down from I can't see 60 to the lows at whatever 50 or whatever, those sales and earnings were not lost on those institutions.
Mm.
I don't know why it came down because the numbers were just too good or the sales growth. And so, okay, this is a new name. I absolutely, and Reddit, I'm very, very intrigued by. Amazon comes out. I think you just have to get involved there. You already said NVIDIA. Um, I like Fidelity's Bitcoin ETF better than the others.
Okay. What's
We
the ticker
come
for
out of
that?
there. Say that again.
What's the
Oh,
what's the ticker?
FBTC.
FBTC. All right. Okay. So why do you like this one more than IBIT? Just curious.
Is IBIT the
That's the iShares, the BlackRock.
Yeah, they're all look, as long as you're not getting squished by fees, they're all probably pretty
Mm,
good. I
okay.
like Fidelity better because the Johnson family's been mining Bitcoin
Mm,
for since the beginning. I've met with some of them. They get it. I think they're just better. They have a better understanding of it.
okay.
Again, mechanics of bringing the Bitcoin in and out daily to squeeze the premium in and out. But look, this makes a new high and it's game on. Like post-halving, all-time new highs in crypto. Look, Jesse Livermore wrote about when Bethlehem Steel cracked par or 100. And he noticed that when stocks crack large round numbers, they tend to run very, very far. Well, this isn't going to be par. It's going to be 100,000. It's going to be par mag 100 times. It's going to be the biggest pivot point the world's ever seen. Every news media outlet is going to be screaming it from the rooftops, probably right around everyone sitting around the dinner table at Thanksgiving or Christmas. And Uncle Joe's going to have to go buy 50,000 worth because his college kid came home and said, check this out. The media is going to, I am very bullish on crypto, not just for the charts, but for the adoption rate. The stable coin adoption is exploding and ramping. Tether, I saw the CEO of Tether last week in New York. When I saw, anyway, he said, yeah, we're creating 30 million wallets a month.
Wow,
month.
That's a lot.
Talk about adoption. And Americans don't get it because our currency is relatively stable. The adoption is occurring in third world countries where the dictators just go, oh yeah, we're just going to haircut you 20% overnight. And they're inflating. Inflation's running wild. Their currency is being devalued. Look, 80% of all crypto trading is overseas. It's not a US thing. And if Trump gets elected, he said first thing he's going to do is fire Gary Gensler. Day one, he's out. And when I was in New York at the crypto conference, they said, and I did private dinner with Pomp and a bunch of these guys, and they went around the table and he said, what's the biggest problem for innovation? And they mostly said regulation. They said, crypto is America's baby to win or to lose. We are losing it because of overregulation. But nevertheless, it's decentralized and you can't regulate overseas. Crypto is, you show me a base like this and wild horses couldn't stop me from buying it.
Well, and to your point, if there is just this sigh of relief after the election, I know, you talked about Gary Gensler and, there's some other things going on with that politically and on the regulation front. But if you're expecting just this, a general rally, then this could be an area to watch. We don't know what's going to unfold, but there's definitely a bull case here, Jim.
Look, if Bitcoin
I'm picking up what you're putting down.
Well, I'm buying what you're selling. Listen, if it doesn't make a new high, nothing matters. If Amazon doesn't make a new high, it doesn't matter. If Nvidia doesn't make a new high, it doesn't matter.
Right.
Somebody calls me they're like, you're a perma bull. You're a perma bull. I'm like, yeah, okay. So these guys send me this interview I did like in the bottom of the bear. And I'm like crazy and bullish, but I'm all in cash.
Yeah.
I'm practical. I understand where markets are in relation to MAs. And when the market's in a downtrend, I'm no perma bull.
Your cup half full. You're always ready to be bullish. Right?
Yes,
you're not always bullish. You're always ready to be bullish.
Look, the market has been going up since the market was created. If you're a perma bear, you're kind of a moron. The market's going up 80% of the time. And maybe it's going up 65% of the time, 75% of the time, sideways a little bit and down 10. You're fighting those numbers. It's way better to be a perma bull optimist and you're way more fun at parties.
Yeah, there you go. And okay, so crypto, you obviously are salivating over. I think it's fair to say, chomping at the bit, whatever you want to call it, if it breaks out. So just a little recap here, I guess, and some wise words to end on. Then, Jim. So we talked about Bitcoin. You also mentioned Amazon and Nvidia. What else should traders be focused on for their watch list right now?
If Tesla makes a higher high, I think you have got to engage there. Look, it depends on how much risk you want to take. Like I think A-Lab and Reddit are just Reddit is more like Facebook all over again. Okay. I mean, 2 years post IPO. Look, the golden bar list is the new high list. Okay,
Mm.
whatever makes a new high first with phenomenal fundamentals. Like you show me a 99 comp stock coming out of a more than a 7-week digestion after this fear-induced sideways panic.
Mhm.
Yeah, the relief valve's going to go off, and the odds of a rate cut are like 98% on Thursday, and the odds of another rate cut in December are, I believe, in the 90s. I just don't believe we're going to have more rate cuts next year. The economy is too strong. But if the economy weakens, the Fed's going to, take care of us. It's not a dual mandate. It's not price stability and jobs. It's the third mandate is everyone's got to make money. That is the Fed's new mandate. So they're not going to let the market go down unless it gets out of their control.
Yeah, so that's a lot of detail on the bull case that we have on our hands, Jim. Meanwhile, you are hedged. You said how hedged, would you
Very hedged.
say? Very hedged.
I'm short an enormous amount of in the money calls on QQQ. I'm short Lilly calls. I'm short some Nvidia calls. I'm net long, but I
Mhm.
have I am fearful this is going to go on. Like the odds of a landslide for either candidate is pretty darn low. I'll tell you
Mhm.
this, the market's offsides. If we get a landslide one way or the other, the market is completely offsides. We could see an amazing, powerful move, but the likelihood is we won't know
Right.
Wednesday, Thursday. And
That
then
very well could be the case.
if it's super close, let legal this is not known when it's going to when we will know. And until that is over, it's a little bit
Mhm.
time to the simple question I ask all my hedge fund buddies is, can you make money? And
Yeah.
no one's been able to make money for the last 5-10 days. So until that changes,
Mhm.
chill.
Yeah. So would you say so for obviously, you talked about the QQQ, so that's sort of an index position, of course, but for the individual hedges, so for your Nvidia position, would you say it's a half hedge or
It's
how
a third. It's a
it's a
third.
third? Okay, so you've got a third hedge there.
You got to understand, I have a mammoth position, okay, like a big percentage of my account. I mean,
Right.
I'm reasonable with risk management. I'm not a cowboy like I was 30, 40
Mhm.
million years ago. I'm sorry, please ask me another question.
Jim, I love this. I love this. You just gotta keep going. Answer to the full extent. But okay, so a third hedge on Nvidia. Any other big individual positions that you're hedged a third or a half? Or any other guidance that you would give on hedging. So say you're, somewhere between, I guess, 60 to 80% long, or who knows, maybe even a little bit more. Would you say that hedging, net net, roughly half of that
Yeah, about
is
half.
what you would
In
be doing, and then peel off if we do get this nice
Yes,
rally that you're talking about?
yes, and the beauty of unwinding a hedge is when you unwind your hedge, you're now all of a sudden max net long the leaders with cushion.
Mm, mm,
If you've
mhm.
been selling and trimming, you're dislodging low cost stock, you're getting out of leaders, and if now all that cash, when the market turns up, it has to be redeployed. Now, what do? You buy a stock and you're on the razor's edge. Now it's 3.5. If it goes down 3.57, you got to cut, and get out. I Cushion is the most underrated variable I mean, risk management is the most valuable,
Right.
but after that, it's cushion. I can
Yeah,
exhale.
position management, risk management, position management.
Risk management,
Yeah,
people think risk management is cutting losses. That is very important, but it's position size. It's so critical because sometimes your losses get out of control just because the market does crazy things. My neighbor, he said to me, Jim, that sounds like the biggest position a kid like you should ever have. It's crazy. He goes, price will hurt you, size will kill you. And he was dead right because I had way too much stock and it really hurt bad.
yeah,
Um, those are the critical issues right there.
right. Okay. So hedge about half of your portfolio, and especially if you do have that cushion. I think that that's a key differentiator. You do have to follow the sell rules. We always talk about this. If you don't have the profit cushion, if you are down or 7, 8, 10%, I know you don't let them get that far down, Jim. But once you have that cushion established, it's more about the hedging and trying to sit with the winners and ride the wave.
Hedging is an imperfect art. I was in Viking, and we had
Which Viking?
not the
Therapeutics?
ship, the bad one. I had the bad one today.
VKTX.
Yes,
Okay. Mhm.
and I
Mhm.
had a bear put spread on. In other words, I was long the at the money puts and short the out of the money. And when that thing started to reverse today, I could not move fast enough to cut my losses where I wanted it. It just got out of control. Now, had I had a half my account in it, would have been a devastator. But as is, so anyway, hedging is imperfect. So I'm basically what I'm telling you is I got caught in Viking today. So there's no perfection in it. There's dampening the damage.
Mhm.
Um,
Right.
and again, this market's been so good. I almost feel like I have to apologize for a stock that didn't work. Normally, 7 out of 10 don't work. And in this crazy bull market, it's more like, you know, 7 out of 10 do work more. That's how rare of a moment this is. That you We're in such a bull market. You don't see it very often. And another topic we didn't even talk about is we have 2 big years in a row up. The odds of a third big year up are that they do occur, but guess when they do occur? In revolutions in technology.
Mm,
It's
mhm.
very likely. I think during the internet build out, I know we had multiple 3-year up in a row periods. So don't again fret about, oh, we have had 2 big years up in a row. We can't have a third. We most definitely can have a third. So follow the trend. Don't preempt, don't say, well, it's rare to have 3 years in a row up and get out of your stock. Let them give you signals. You have to be forced into trades for me.
Yeah. And then just so we're covering all of our bases in terms of that portfolio management piece, what if the market does deteriorate from here in a significant manner? What are you going to be doing, Jim?
Well, it's a big challenge because I don't want to give up my low cost tax seasoning stock. I want to get into the new year. So if it really, I mean, I'll roll my hedges down lower with the uh, lower prices. I'm ready for anything. Like what you said is not impossible. Okay, we could see another correction in August. We were down 17% off the high. That was 3% off away from a bear market minimum. We could see that right now. What if the Fed cuts and the market goes down because the market panics about the economy's too hot? Leave your hedges on. And if when you do take your hedges off, be a dimmer switch. Take 20% off, take 15% off, take 20. And the more this market advances, the more you take it off. But don't just go, the market's taken off. I'm going to, cowboy it and take them all off at once. Could
Right.
be a head fake.
Mhm.
I'm not trying to make money with the hedges. I'm trying to remain in my positions that I have low cost in and tax seasoning, and trying to get to the finish line. Look, the golden goose is not going to let you down. Just chill. It's going to be fine.
There we go. All right. Well, Jim, we'll buckle up for the next week and see what the market reaction is like. Thank you for all the wise words as always.
Thank you. Everybody vote.
All right. Thanks everyone for watching, and we'll see you back here next month for our November monthly market report. That'll be in early December. So we'll see you then.